Stream. Let's get into it. All right, let's go and let's talk about the Fed's next move. We're going to talk about rate hikes versus crypto. So let's understand when the Federal Reserve moves, global markets shake, and we have to understand the mechanisms of how traditional monetary policy dictates the fate of digital assets. And in this case, we're going to be talking about crypto. Let's continue on. So, what is a rate hike in the first place? So, it's the Fed's primary tool to fight inflation. Okay. And it's pretty much a tightening. And it's when they raise the federal funds rate, which is the baseline interest rate for the economy. And borrowing costs end up rising due to this fact. It becomes more expensive for banks, businesses, and consumers to borrow money. So it's going to be more expensive in order to get loans, certain private equity, and just borrow money in general. And spending slows. Higher loan costs mean fewer mortgages, fewer car loans, and less business investments, which means the economy would slow down. So less people being able to get large sums of money. Okay, it's not a lot of people rocking around with over 5, 6 figures. So less loans logically would mean less cars being bought, less mortgages equals less houses being bought, which would then cause the people who own the houses to lower the cost of the houses to try to get rid of it and make some profit. So whenever rate hikes come into place, it really just throws off the whole balance. And the goal of the rate hike is to reduce demand to lower inflation prices. Once again, this often causes pain in asset markets because since people have less money, less free cash, people are going to then have less money to flow into assets. So imagine if the economy is a speeding car, okay? Imagine that as inflation. And a rate hike is going to be the Fed slamming on the brakes. And the goal is to slow down without crashing the car, which causes a recession. Now, there is going to be repercussions for this, upsides and downsides. So keeping everything in mind is going to be extremely, extremely important. But when a rate hike comes into place, it means that banks, businesses, and consumers are going to have a harder time borrowing money. And traditional markets, the safe haven shift. So when rates rise, the investment landscape changes fundamentally. Money seeks the easiest, safest return, and bonds become significantly more attractive. So why risk money on stocks or crypto when you could get a guaranteed 5% risk-free return from the government treasury bonds is what a lot of people would ask. Okay, it's still extremely great to invest in stocks and crypto, etc. But especially when inflation is coming into play, definitely bonds, things like that are going to be something to look at as well too. Okay. And valuations crush. So future earnings of tech companies are worth less today when discounted at higher rates, which causes certain stocks and stuff like that to drop. And the capital vacuum. So high interest rates act like a magnet and pulling capital out of certain risky assets that don't have definitive value and into safe savings and bonds, etc. This drains liquidity from the system over time. Okay. So we have to think, okay, we have to make sure that our currency are going to go ahead, make sure that our assets are going to be flowing into non-risky assets. Okay, assets that go up year after year after year after year after year after year. If you're in an inflation heavy environment, you're not going to have the most free capital. So you need to make sure that you're making the best choices that you can with the capital that you do have. And crypto's ultimate role, so it's the ultimate risk on asset. So currently, institutional investors categorize crypto in the same bucket as maybe unprofitable tech companies. Okay, so a lot of high risk involved into it, but outside of Bitcoin can have high reward as well too. So Ethereum, right, thrives on cheap money, for example, or Solana or Dogecoin, or even little random meme coins that have been created. Crypto historically booms when interest rates are near zero, which is involved by quantitative easing, and free money fuels the speculation over time and suffers in tightening. When money gets expensive, which is when rate hikes occur, speculative assets are the first things investors sell to cover safer positions. And high correlation. So Bitcoin, which is going to be the cryptocurrency that moves in correlation to the SPX, also known as the S&P 500, and the NASDAQ 100. These are going to be the most important companies on the United States stock market, and Bitcoin moves pretty much in correlation to these indexes. Okay, so all the most important companies are jumbled up into one big index, also known as the NASDAQ 100, and we have the S&P 500 as well too, which is going to be the other choice. Bitcoin is a really, really good asset. It's very, very safe, and it mirrors the S&P 500. Make sure, especially when you're going into an inflation heavy economy, your money is parked properly. So a lot of times you can get lost just investing into little random plays that will not have any real profit value a couple years down the line, or you would have been able to make significantly more profitable decisions by just investing into safer assets that are almost pretty much guaranteed to go up versus just some random speculative asset that you think is going to go up. Okay. So make safe decisions. And a lot of the times within the investing and trading world, the safe decisions are really going to be the profitable decisions. So if you don't see yourself losing money, then that's going to be a good trade. Try and take the trades where you're not going to lose money. The trades where you're not going to lose money are going to be a lot better than the trades where you could win a lot of money. Okay. If you pretty much are barely losing, that means a lot of the time you're going to be always winning, or a good chunk of the time, majority of the time, you'll be winning. Okay. It's about your win rate. It's about your risk to reward ratio, and taking the safer trades is going to be a lot better versus just focusing on profit, 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 profit. Protect your portfolio, make safe investments. You wouldn't buy a random house that had a bunch of issues versus buying a house that actually has good structuring, good fitting, and a good inside. That way, if you ever did want to sell it, you could sell it easy. But if you bought a random piece of property that has a bunch of issues, you would have to throw more money into it and hope for some profit later down the line. Okay. So keeping things in perspective really, really does matter. Sure. And the seesaw, so the dollar index, the DXY, you might have heard of it. So there's a strong inverse relationship between the strength of the US dollar and the price of Bitcoin. This is also because Bitcoin is used as an inflationary hedge, since the US dollar is going to be a infinite currency. Okay, it can continuously just be printed, 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 and owned by everybody. Bitcoin is going to be a finite currency. Okay, so only a certain amount of people will be able to own Bitcoin. Once it's gone, then it's going to be completely gone. So rates up equals the DXY would be up, which is letting us know that this is strong US dollar and that the economy is trying to progress. And crypto down, okay, would be in relative relation to this, okay, equaling weak asset prices. So when the Fed rakes hike, Global investors buy dollars to access those higher yields, and a stronger dollar makes it more expensive to then buy certain Bitcoin assets, other cryptocurrency assets, and stocks, which suppresses the price. Okay, so while crypto is going down, though, gives you a really, really good opportunity in order to save your cash and buy assets at a low. Okay, try and capitalize and always buy assets at a low. If you analyze that the setup or whatever you're looking at is meant to go up year after year after year after year after year after year, if it's hitting a low point, invest at the low points. Stop buying at all-time highs. Okay, and don't just look at when something is going down as a negative thing. Price has to pull back in order to go up. So if price pulls back, see that as an opportunity. Ask yourself, is that going to be a good buy? And if you're struggling to identify a setup, head over to stackmode.net or just watch my videos. Okay. Take advantage of the economy. Okay. When economy or when assets are down, take advantage of that. I don't care if it's real estate, Bitcoin, stocks, whatever. When assets are down, you have to take advantage of that low, because just like everything else, price inshallah will sweep back up, and you don't want to be in a position to where like, oh man, I wish I invested at X, Y, and Z time when you could have. So take your action, do what you need to do, and make your decisions today. Okay, catch your assets when assets are at a low. When the economy is in shambles and everyone's panicking, that's the time you need to be buying. It's really important to try and have some cash on hand. This way you're going to be able to make some good decisions and invest into these investments when you need. And the long-term counter narrative. So while rate hikes hurt crypto in the short term, the reason for the hikes might fuel the long-term bull case. Okay, and the long-term counter narrative. If inflation wins, then the Fed raises rates, but inflation could still stay in a high stagflation point, and fiat currency loses purchasing power rapidly. And the hard money hedge, and that's why a lot of people look to and run towards Bitcoin, for example. Okay, Bitcoin, yes, is good for profit, but you can make a lot of money quicker playing options or futures, for example. But just the fact that Bitcoin has a fixed supply, it gives you a sense of asset superiority. So once it's gone and somebody has it, all right, and if you weren't to have it, then they would have an advantage. Okay, so Bitcoin's fixed supply, it's 21 million, and it's designed as an escape valve from failing fiat monetary policy, since we know that over time the US dollar is meant to cost, or it's meant to give us less and less and less purchasing power year after year after year after year, since more dollars will just be printed. And the pivot hope. So the market's always trying to predict when the Fed will stop hiking and start cutting. And that's going to be the pivot. So the moment they pivot, crypto usually rallies super duper hard, because once they start pivoting, people are going to be like, all right, you know what, economy's safe. And then people are going to go ahead and start taking advantage of the buys. So mix in the economy news with the charts, and you guys are going to be able to make some really, really great decisions and some great choices. Use your higher time frames as well too. So you can check out the FOMC meetings on forexfactory.com. And the days the Fed announces rate decisions are historically the most volatile days of the year for crypto. So FOMC, a lot of times, is when they release a bunch of really important rate decisions and reports. And cash, understand that cash is going to be a position. You don't always got to be in a setup all the time. Cash is a position. So in a high rate environment, holding stable coins, right, the earning yield, is often better than forcing bad trades in a bear market. You just don't need to do that. Don't do that, actually. Okay, don't force trades in a bear market. Just wait for price to pull back, wait for buyers to step in, and then go ahead and catch the low. Catch the low. Once again, if you're struggling with finding the right setup, head over to stackmode.net and look for decoupling. It's the ultimate bullish signal, and it'll let us know when it's time to buy. So when tech stops drop on Fed news, but Bitcoin holds steady or rises, a lot of things are going to let us know when it's time to buy. Okay, so if you see tech stops dropping really, really hard, and then the Fed announces some certain news, you start seeing rallying, put that together with your higher time frame analysis and put it together with the charts, and you can start seeing like, okay, price is ready to buy. Or after big events like CPI and stuff like that, etc., A lot of people hold their cash until these big news events come out, and then you'll start seeing market make its move that it needs to be making. And sometimes you'll even see market, let's say for example, trending in a downwards direction weeks or days before this news event comes out. Then when the news event comes out, price will go ahead and blast in an upwards direction. Okay, so make your decisions patient ones. Okay, make sure they're extremely patient decisions, because the more patient you are, the better setups that you plan, the more money you're going to be able to make, inshallah. All right, I'm gonna catch you guys in the next one. Stay prayerful to God, keep grinding. Head over to stackmode.net for all trading education. Peace.